Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for September 17th. Sitting on a Monday where there was definitely some selling going on in the overall market. So we'll see how it impacted our different sectors. Before we do, of course, let's see what we're looking like for earnings before tomorrow's open. Actually, several S&P 500 companies are coming out before tomorrow's open. We have FedEx and Oracle coming out after market close here today. Of course, both S&P 500 companies. And then, of course, tomorrow before the market open, where the heck are you tomorrow before market open? There you are. We have AutoZone and General Mills. So those are our S&P companies. So for non-earnings season, quite a few S&P 500 companies in one day. So we'll see how those stocks perform, if they can get the ball rolling or fail to meet expectations. We shall see tomorrow. Taking a look at our overall market, a lot of selling today in the market. Just really couldn't get the ball rolling ever. Here you have the S&P 500. We do continue, of course, to hold our breakout. Pretty bearish looking day, though. We closed right about that 20-day moving average. That did hold at least briefly. Let's continue to monitor it. Really hasn't done anything wrong. We know our support levels down here. This should hold. We know our resistance zone is up in here. So it might just not fly straight up, but then, hey, it might break down. But it hasn't been either of those things just yet, right? So we'll continue to monitor that from a technical point of view. NASDAQ, a lot of selling, very similar, closing very close to its 50-day moving average. We'll definitely want to, at least I'll definitely want to be keeping an eye on this little swing low that we placed last week or at the end of the week before. If we break that, and again, this is just an if, until it's happened, I'm going to assume that it's not, then we will, of course, have broken the 50, broken support, and made lower highs. Not very bullish if those things do happen. Again, we still have a lot propping us up, though. We still have our support level. We still have that 50-day moving average. We still have the trend line. Nothing is broke yet. Just a day of selling is all that we've seen so far. But it was pretty legit selling over in the NASDAQ today, no doubt. Dow Jones also sold off, didn't fare quite as poorly as some of our other indexes. We still remain very technically sound over there. Upward movement, higher highs, higher lows, breaking resistance. So nothing really to see over there today. Russell, though, is hanging by a thread. Ran right back down to that old breakout point. Closed very bearish today. I mean, that's a big, huge red candle closing there, very close to the lows. Obviously, we want to see that hold. At least if you're a bull, you do. If that breaks, that would be a bearish signal. Again, what would have happened if that happens is we would have made lower highs, lower lows. We do have that 50 kind of right below, so that's kind of what I would be watching. It's going to need to close below that if we fail the breakout point and that 50-day moving average. That would definitely make me say at least a little bit bearish and certainly not bullish. Again, we haven't had that happen yet. We did hold. It was ugly, but we held, at least for today. So that's where we find ourselves after a pretty good day of selling in the overall market. Charts haven't really changed, but Russell is kind of hanging real close to potentially doing that. So you'll definitely want to monitor that price action over the next couple of days, how it responds there. That's been holding, right? It should hold from a technical point of view. So if that gives out, that would certainly be a sign of weakness. Over in the material sector, we started out really strong, didn't finish the day poorly, but we started out really strong. Then we kind of did what materials does, kind of retreated off of the intraday higher low to kind of close in the middle. We continue to be overall within this trading range on the material sector, but definitely, the past week, we've definitely seen some nice upward movement, but certainly a lot of profit taking off those intraday highs over in materials today, as we've really gotten used to seeing, right? We're used to seeing that happen over the material sector these days. On the energy front, we ran into, much like our materials, we started, pretty strong, ran into that 50-day moving average and the XLE energy ETF. That ended that bullish run, at least for today, really sold off from that to close relatively flat on the day. We're still, trading within this overall range. We do have that overhead resistance in the form of the 50 that at least today we know mattered, right? And of course, that previous swing high, not too terribly far above us. So I think whatever your stance on energy was coming into today, I don't really think it's probably changed too much overall, at least from a technical point of view, based off of what we're seeing over in our energy charts. And it still kind of continues to be in that little sideways movement. We saw some upward movement early on our financials, kind of carrying through Friday's nice candle. We ran into the 20, which is now sitting right above us, and we're knocked back down and still looking at this swing low that kind of coincides with that 50. We're seeing some weakness that I'm not loving over in the financial sector, but I'm not ready to throw in the towel on it just yet. But if it breaks that, I'm going to be, at least from a short-term point of view. We're kind of caught in what I call moving average soup, when we're kind of stuck in between all of our moving averages, when we're not sideways, when we're overall trending in one way or another, aren't in some long sideways trend. We're kind of stuck between the averages. I'd never love to see that. I'd like to see it come out one way or another, depending on what side you're on, up or down. It probably would be up to you. So we'll definitely monitor how we operate there in the days to come. Not really loving that chart on either side, though. I think that's a stay away in the early parts of this week, at least. I could see something developing within the next few days if things go the right way, though. Taking a look at industrials, they do remain strong. We're very strong early. Did retreat on the intraday, kind of put in that kind of a little bit of a bearish candle, a little bit of a gravestone to close the day. Overall, we do remain very strong. We really powered through on this breakout. Profit taking makes sense. The market was selling. It kind of gave in a little bit, still closing in the green. Don't be surprised if we see some pullback. But again, we've seen these type of sectors before. When they're hot, traders are looking for an excuse to get in. So we don't necessarily get a deep pullback. We can hope for one, but that's something we'll want to keep an eye on. But overall, still very strong over in the industrial sector. Of course, tech was very weak today. Very similar analysis, as always, to the NASDAQ. We do have the trend line, the 50, and the previous swing. That should be holding for us. If that fails, it's not bullish, right? So let's continue to monitor that. Really hasn't done anything tremendously wrong. Don't love it today, obviously, if you're a bull. But we're showing some signs of weakness in the very short term over there. No two ways about that. Staples looks like it's going to take another run at that resistance for a potential breakout opportunity. Hasn't happened yet, but it's remained pretty strong on a day of heavy selling. Definitely showed some really good relative strength today. So let's watch that. Maybe we can get a breakout over in that sector. That sector has been great for quite some time. Really been doing traders right. And we don't really have a lot of overhead. If we can break through that, we've got a little room to run. The dollars aren't big, but these are fairly reasonable moves. So let's keep an eye on that as a potential breakout opportunity. At least that's what I will be doing as the week progresses. I think you could put a similar analysis over in the utility sector. As far as a breakout goes, I'm not a huge fan of the utility sector, just generally speaking, but I do think we could apply a similar analysis we did to the staples, where we have that top. We overall are showing some upward movement, just kind of stuck in this below resistance, which again, we know how hard it is to break resistance. Could be a breakout opportunity developing, and of course, it could be a selling opportunity once we get back there if we struggle like we have over the last little bit. So we're working our way closer to resistance over in the utility sector. Had a pretty decent day, though, here today. I'm liking the way the healthcare sector is looking. We, of course, really broke out last week. We all know how strong healthcare has been lately. Now we've seen a couple days of pullback. Obviously, we haven't seen any turnaround candles or anything like that just yet, but this is how a pullback opportunity develops, right? So let's monitor that. Let's see if over the next couple of days we can get one of those doji or hammer type of candles at the 20-day moving average at that previous resistance level. Let's see if something develops there for potential entry into that area later in the week. At least that's what I'm certainly going to be keeping an eye on as the week progresses. A lot of profit taking in discretionary today. It definitely was one of those, along with tech. Really struggled here today. Tried briefly to break that resistance level, failed, of course, miserably. Now we know we saw selling on Friday, carry over very bearish candle, much like we saw on tech, kind of closed at the bottom of the day on tech, on the Russell. So doesn't look like there's any reason to technically believe tomorrow we're going to magically turn around. But we do continue to hold our overall trend. Much like our NASDAQ, we know we shouldn't break this previous swing low. That should act as a level of support if we get to that price. So we do have things to hold us up. We have that swing low. We have the breakout point, obviously the 50-day moving average. All those things relatively close to one another. So there's a lot to prop this sector up in the short term if it's going to pull back. So those will be areas I think that we want to be keeping an eye on as we move into this week of trading. And lastly, our real estate continues to go back and forth within this range, still looking at it as a potential breakout one way or another. But until we do, I'm going to assume that we're not going to. I'm going to assume it's not this week, right? Because it's hard to break these support and resistance levels. So we'll continue to monitor really the same prices that we've been monitoring for a couple of weeks now within the real estate sector, at least as directional traders. That's kind of a very sideways situation that we have going on over there. Speaking of sideways, we do kind of continue to trade within the ranges on our silver and our gold, as you can kind of see here. Haven't really changed too much dramatically over the past little while of trading. Resistance still at 1220. We have our support. It's kind of developed a little bit of an intraday floor. I don't love it, but kind of developed a little bit of a floor down in here as the last few weeks have developed. I think you're still looking at a potential bullish signal if it breaks to the upside, and a bearish signal if it breaks to the downside. If you made me do anything today, I'd bet on the trend. I'd bet on resistance because that's what's been working. But thankfully, I don't have to do anything today. Right? I get to choose when I want to do stuff. Same with silver. We have the same type of pattern. We continue to dance around that intraday high, that intraday low. Again, we can always go in, and it always can be helpful to kind of shrink your time frame. We'll get a little bit of a bird's eye view of the chart. We can see it's really kind of developed. It feels like it's got it figured out, right? Traders feel like it gets up here, sell, get down here, buy. Sooner or later, it's going to come through. But you can certainly see these type of patterns develop for a while. Now with that said, it could break as early as tomorrow too. But it's not uncommon to see these floors. We saw it build, back in July, where we saw that floor build for several weeks before finally giving out. So it can definitely take a little while to develop. We want to be patient over there because we might be rewarded if we are. Taking a look at the dollar, continues to basically be the dollar, same place as it was Friday and Thursday. Today is a red candle. Friday was a green candle. Thursday was a red candle, but really we are very unchanged. We do kind of continue to hold this little swing support level. So there is that, I suppose, but we're still stuck in this range. And in my opinion, at least until we're out of it, we have to take that very cautious, neutral type approach to any chart that looks like this as far as I'm concerned. But again, that's just me. You don't have to agree with me. We saw some buyers come in off of the kind of support area on natural gas that we were kind of looking at as it closed down on Friday, bought back into it. It's still a pretty volatile area. That support's still strong. We're seeing a lot of movement off of that support, but we are overall seeing a lot of weakness. When I see a chart like this, I say, yuck, stay away. Let's wait for a breakdown, or let's wait for a breakout that may develop. It's just not there today. So I'm not loving this chart, but you have to love the fact that that support continues to hold. It's been fairly predictable in that regard, helping us get out of our short trades or potentially into our long trades if we were going that route, because that support area has really been holding its own, which is always nice to see. Nice when things do what they're supposed to do, right? And lastly, our crude continues to trade within this range. We're seeing some movement. We're seeing some intraday volatility. But again, when we get stuck in these ranges, it's just really hard to get out. Right? Everybody knows these ranges. So it's going to take something at least kind of real, I think, to push us one way or the other. We continue to be very volatile. I'll continue to say the same thing I've said on crude for a while. Right or wrong, I think it's something that there's just better opportunities. It's not something I'm interested in playing directionally at this point. But we do, have more information about how much this support and resistance level matter for it. So that's always a good thing, because eventually it's going to break one way or another, and I'm going to have an opinion, right? That just isn't today. That is not today. So really not much has changed over in crude from where we were on Friday, and really where we've been for a while. We've had some failed breaks, but really we've been very sideways for the most part over the last month or so. A couple failed breakouts. We did have that big sell-off, bounce off this 200, but really it's been pretty boring if you think about it. Just the day-to-day, there's lots of action on crude. So we haven't really moved all that much as of late. So that is where we find ourselves in the overall market as we wrap up this Monday. And that will do it for the market recap. But as always, it is certainly my pleasure, and I do appreciate everybody's time. If you haven't already, be sure to subscribe to the Tackle Trading YouTube channel and hit that notification bell so you can be alerted of all the new videos that we're doing over here. Also, be sure to follow us over at Tackle Trading on Twitter. If you did enjoy the market recap, it is always helpful and appreciated if you give it a thumbs up to let us know that we are doing all right and we're on the right track. So thank you in advance for that. With that, happy trading, everybody. Get out of here, and I will see you in the next one.